Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about DraftKings earnings this morning, the crazy action in Black Rifle Coffee Company yesterday, and what's going on with the recent changes in mortgage rates. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. DraftKings released earnings this morning, and the stock is down 13%. Time to buy or time to bail?
Hey, good morning, everyone. Thanks for that intro, Allie. And before we even talk about the DraftKings, earnings miss, they actually had an earnings beat this morning, but they guided down. We'll talk to that in just a second. But I do want to show you some interesting price action this morning. If we go over to the chart, this is the 1-year SPY, but the futures, yesterday was down big in the market. So again, it's starting to get a little bit old. A lot of people are getting a little bit antsy as to what's exactly going on in the market. But so we had the huge down day yesterday, and then we decided that this morning it was set up. Even last night, it started to get set up for the a nice big up day today. But it didn't happen. It was trucking right along all the way to, you can see, just a few minutes, about half an hour ago, and that's when Germany started making some pretty strong statements about the Russia-Ukraine situation. Overall, I don't think that's super helpful that they did that. However, it did kind of hit the market all the way down here, and then we're starting back. So I still think we're set up for a pretty strong uptick for today. We'll see though. Kramer was just on saying too early to buy. I'm moving some stuff around today. We'll see how it all plays out. But this is DraftKings, and DraftKings this morning, they actually beat earnings in the fact that they lost less than expected. So maybe I can hunker. They're still losing money. They're expected to lose, 82 cents, I think is that number down there. Is too small. But they only lost like 35 cents per share. But the problem was, so overall earnings and revenue are fine, but when they guided down. They said they expect a lot more costs in the future. So when you look at the whole story of DraftKings, if you go out 3 years, we've been in this name I'm mostly out of this name. I think I'm completely out of the name across the book now. I'd have to look though. I'm going to check here shortly since I missed earnings this morning. But yeah, this was a SPAC from way back in the day, that special purpose acquisition company. Black Rifle just did that. Anyhow, everything was great. Stock went from $10 up to $70, and it's been just a house of pain. It's bounced a little bit, but then again, it's falling hard this morning. So overall, I think you have to say it's time to bail on DraftKings.
Switching to yesterday's market, Black Rifle Coffee Company was halted twice later in the day. What's your take on the price action?
Yeah, you don't see stocks halted too often. Let's get a better chart for you. That one's kind of terrible. Here we go. So this is the dark blue yesterday for Black Rifle Coffee, BRCC. You can see that the trucking right along, doing its thing. It was a SPAC. It was $10, like a week ago or a week and a half ago or whenever it was, that had its IPO through the SPAC process. Well, obviously it went into play. You can look at the volume down here at the bottom. There were two big spikes. The first one was here where it spiked above 20 at around 2 o'clock Eastern, and then started crashing back down. That's when it was halted the first time. And then when it came out of that halt, it ran all the way up to above 22 there, touched 22.8 for at least one trade, and then came crashing back down and halted at 9.04. You don't generally see this on a day-to-day basis, but I think when you look down here, I would have to imagine, I didn't really see anything in mainstream news, so maybe the Reddit folks, the meme stock folks might have this in play, or somebody's out there squawking a lot about it. I mean, I talk a lot about Black Rifle, but not to the tune of, millions of shares changing hands. I just like the coffee. I think it's a good business model. But you can see kind of where it closed. So what do I expect now for Black Rifle Coffee? Overall, I think we're going to continue to see more of this, some crazy price action. So if you're in BRCC, hold on.
Last question. Mortgage rates have increased significantly in the last few weeks. What's going on, and will it continue?
Well, mortgage rates are driven by the market overall. So here I'm bringing up this is NerdWallet here for your source, so you know what you're looking at. But pretty good chart for you to take a look at. So how does it all tie in, right? So we have inflation. Inflation goes up. Okay, so that means goods and services are more expensive. Well, now we have interest rates starting to climb with it. That happens naturally. The Federal Reserve, even though it's all CNBC is talking about, that in Ukraine, they haven't moved interest rates yet. They forecast that they're going to, and I think they will now, to the tune of anywhere from 3 to 7 times during 2022. But the market, remember, markets are a lot of things, but they're extremely efficient. So they're already pricing that in. So really, you've seen your mortgage rates jump, and it's a little bit of a spaghetti chart. But the blue line here is your 30-year. That is your normal, 30-year fixed rate mortgage. Most people do fixed rate now since rates are so low. Some folks are still doing ARMs. Not me. I would not recommend that, but every situation is different. But for your 30-year, my 30 years on, our couple properties are below 3, right? And that's what pretty much everybody has when you were back in here. And this wasn't that long ago. That's like 4 months ago. And it's been down for years. So now if you're going to refi or if you're purchasing a home, you're looking at paying over 4%, which traditionally is still a great deal. Historically is still a great deal. Just recency bias. A few months ago you could have had it 1% cheaper, and if you do over the lifetime of loan, how much that cost you, it's a lot of money, right? So the 30-year now up over 4, and this green line, which was the 15-year, which if anybody's going to give you money at 3%, I would take it for 30 years personally. But if you want a 15-year for whatever reason, that now has gone above the 3% mark. So again, historically dirt cheap, but these are the type of interest rates that might make you mad if you just missed it, or if you're trying to buy a house right now. But I think to conclude, I think this is not going to change anytime soon. These are going to continue to march higher throughout 2022.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here Tuesday due to the market holiday on Monday, President's Day.